Good morning, everyone, and thank you very much for joining me. This is the Morning Market Review. It's Wednesday, it's the 22nd of February. My name is Russell Shaw, I'm a Senior Market Specialist at FXCM. Take a look at my email address, rshaw@fxcm.com, and if you need to contact me, that's the email address to do it. Just going to bring up our high-risk investment warning, and I just want to double check if you guys can hear me, see me, see the screen, the three yeses. All right. Let me bring up the market commentaries disclaimer. I'll keep this on screen for a few moments. I'm in the office today, so there are some people around. So if you hear background noise, just let me know. And references, FXCM Market Scope and Trading View. And what we'll do is, before we get onto Market Scope or Trading View, what I want to do is just run through what a trend is. Okay, I want us to try and be as objective as possible with regards to the market volatility that we're seeing. And markets don't move up in a straight line. It's very important that we understand that markets zig and zag. Now, it won't be quite as ordered as what I'm drawing on the screen, but generally an uptrend is higher troughs followed by higher peaks. So if I had to put in a reference trough, okay, a reference peak, okay, here's a higher trough, here's a higher peak, etc., etc. Okay, the big idea here is that we've been moving we've had an impulse move that's been very strong since the lows of October last year, and the idea now is how much further can that impulse really run? The idea here is that we may be in merely a corrective move despite the volatility that we're seeing. Remember that there's going to be a narrative for every, there's going to be a narrative for, sorry, I want to get my arrows here. There's going to be a narrative for every single stage of the trend. There's going to be a narrative for this impulse that's generally going to be good news. There's going to be a narrative for this correction, which is generally going to be bad news. There's going to be a narrative for this, for this, for this, for this, for this. So there's narratives that are going to run through here effectively, and this is going to be something that we should start talking about more, is that bull markets always without fail, if you go back in history, bull markets climb a wall of worry. Okay, there's always worries in a bull market. Okay, but the truth of the matter is that's a bull market. A bull market climbs a wall of worry. A bear market, by the way, slides the slope of hope. Okay, the bull market climbs the walls of worry. So the idea here is markets trend, they just don't trend in a straight line. Okay? They trend, they just don't trend in a straight line. So I want to just add some analysis to this. Let's do the DAX, and we'll do the US dollar, and then we'll end, and then we're going to go through to the crypto minute. Okay, so let's start off with this chart here. This chart here, which is the DAX monthly chart. Okay, I've got the COPOC indicator here, and I want to add in the 3-month moving average as a signal line. All right. And I want to add in the 0 line. All right, here's the 0 line. Let's add that in. All right, just make this richer red. Okay, so we're under the zero line. We've turned up. We're above the signal line. Okay, that's generally bullish on a primary trend basis. Okay, we are on a primary trend basis. So the idea here is the bear market slides the slope of, okay, so you can see here, going into a nice bull market. Remember, it's a monthly chart. Here, got a nice bull market over a few months, right? Here, nice bull market over a few months. Right. So you can see that when it turns up, okay, there are instances. Let me bring my arrow in here. There are instances when we have down month, and then it moves up. Okay, down month, then it moves up. Down month, then it moves up. We don't move in a straight line. The trick is to know when it is over. Okay, the trick is to know when it's over. But the idea is we've just crossed the signal line and we're still under zero. And we just got to be very careful to not get wrapped up with the narrative that's been run. So yes, the bull market may be over, but we need more evidence. Okay, we need more evidence. Let's take a look now at the weekly, daily, and hourly. Okay, so just head here and bringing up the weekly, and we've seen on the monthly the Copac indicator's up. It's still under zero. Let's put our peaks and troughs in, and you can see here we've got something which is workable. We've got a trough. Not only do we have a trough over here, we've got a peak. Once we've got the reference peaks and troughs, okay, we've got the higher trough. Once we've got the higher trough, here's the higher peak. Okay, so we're in uptrend on a peak and trough basis. There's no doubt about that. But it can't move in a straight line. It has to oscillate. It can't move in a straight line. It has to oscillate. Okay, and the fact of the matter is that might be exactly what we might just be seeing some sort of oscillation here. Let's take a look. Let's put in the arrow, and if we've got it now, what you can see, if we get a severe pullback, this would still be corrective. Okay, this would still be corrective in nature, this pullback. Why would it still be corrective in nature? Because we've got the pattern of higher troughs followed by higher peaks. Until we break below this higher trough, we've got a bull market. The other way that the bull market can end, something that would be much more serious, would be actually going into a bear market, which would be a lower peak followed by a lower trough. I don't see any evidence of that just yet. Not to say we won't get it, but we certainly don't have evidence of that. What we do have evidence of is a slowing impulse. Okay, we've been going up, right, since December. Okay, it's not surprising that there's some profits that are going to be taken off the table here. So some sort of pullback here would be healthy, one would expect in a bull market, and it gives us the platform for the next leg up. Okay, there's no signs of even overbought here. There's no signs of exuberance. So all this talk about the market getting ahead of itself, technically I don't see any evidence of that. It just looks like a normal ebb and flow, peak and trough that is typical of climbing the wall of worry. Now, what we do know is that momentum has slowed. You can see that it's slowed. It's the day chart now has slipped. Okay, it slipped from the daily into the it slipped from the bullish channel on the daily into the neutral channel on the daily. That is obviously a slowing down of momentum. Well, that seems corrective to me in nature, considering the primary trend, considering what the Copac is telling us, right? So yes, there could be some short-term pain here, okay? But that could also be exploitable. It could effectively set up the next opportunity for us, and we've got to be quite savvy about that. I don't know if you guys remember, as maybe last week, the week before, I said I was starting to allocate some positions. One of the positions was for a local stock here. I've only allocated 50%. I want to see the pullback so I can allocate the next 50%. Okay. In other words, I want to smooth out the entry price. So this pullback here, I'm looking at as a potential exploitable opportunity until proven otherwise. Okay, until proven otherwise. So sure, things could be much more worse, much more severe than I'm thinking, but I need to see evidence of that. Let's have a quick look at the US dollar, and then we shall end this, and we will go on to the crypto minute. And the dollar, you put your peaks and troughs in. We're in a downtrend. Okay, so let's go back to the Microsoft Word, and okay, never moves in a straight line, ebbs and flows. Okay, peaks and troughs. So yes, the trend is down, but we're never moving. It's going to be that corrective movement. Here's what a bear market is, Anna. Okay, bear markets. Slide. Let me write that properly. Slide the slope of hope. So the bear. So in a bear market, you're always hoping for better things. You're hoping, but it just doesn't materialize. Bull market, getting the constant wall of worry, constant worries, constant sentiments that crop up that seem to worry the market, but the market ignores that, carries on moving that. Well, here is our peak, trough, lower peak, lower trough. Okay, this could be the next lower peak. I'm not certain, but the idea here is there's no indication that the dollar has actually changed primary trend yet. It could, but there's no indication of that yet. Okay, so the idea here is in the downtrend. Okay, so I can see that on the daily chart, the momentum has shifted from down to up. No doubt about that, but it could be corrective in nature. Now, I think one more thing to look at is I did a extrapolation of the Fed funds futures. It has changed up, so it does need watching. The Fed funds futures showed the terminal rate shows the terminal rate now as in August. So let me just tell you how this has evolved. When I first looked at this a few weeks back, the terminal rate was in June, and it was quite a steep slope after that, indicating that the market was expecting that pivot. Then we did our Outlook 2023. It had shifted from June to July, and there was still a steeper second half. Well, the terminal rate now has pushed back into August, and now it's gone a lot more shallow. So it still sees that rates reach a peak, around about August this year, and then passing in one rate hike towards the latter half. And that's something it's definitely in flux. That can affect the peaks and troughs, of course. But right now, based on COPOC, based on DAX peaks and troughs, the idea here is there still seems to be a pivot somewhere that's priced into the market. No worries, Howard. Nice to have you on the webinar as always. What we're going to do now, guys, is we're going to wrap up here. I'm going to go through to the crypto minute, and please join me for that. Just before I sign off, if there's any questions, we've got another 2 minutes here. If there's any questions, just go ahead and type those in. The idea here is, yes, there are risks, but there's going to be a narrative that accompanies every leg of a trend. A trend's always going to, uptrend's always going to climb the wall of worry. Always. If you go back in time, you'll always find issues that have cropped up that have really worried the market. All right. All right, nothing coming through. So let's wrap up here, and then we'll go through to the crypto minute. Thanks very much, guys.